Hello and welcome to Leviathan News. Today is August 30th. It's me, Garrett, and DeFi Advisor. Maybe we'll have some special guests on. Who knows? We'll find out. But big news of the day is that the SEC can get wrecked after a district court came back and handed Grayscale a win for their ETF. Pretty awesome, actually. Pretty awesome.
Yeah, we got to react in real time to it yesterday, but now we've actually got to dig in the details, and now today we can maybe provide more informed commentary.
Do you want to talk about it a bit, Garrett?
Rats, you called my bluff. I was hoping you two would provide the informed commentary. I was just too busy popping champagne.
Let me bring up one of the tweets that we actually posted yesterday, so we can walk through it, provided by an actual legal mind, and then we'll provide some comments on it. So Jake Travinsky went through and said that the Grayscale victory over the SEC is massive, right? So what happened with the Grayscale outcome is that it wasn't just a win. It said that the agency violated the APA, and the APA essentially says that all federal agencies have to treat companies similar, and that you can't bias against one company and while providing services for another. And this came up in the context of how the SEC has been treating Grayscale, right?
Yeah, and reportedly it's super rare for courts to rule against it. They basically just give the agencies the benefit of the doubt in most cases. So the fact that this came down in such a kind of like unambiguous fashion is what's apparently quite stunning to legal experts.
Yeah. So like the thing about the APA is that the courts need to treat Grayscale the same as they treat any other company that applies. And the courts found that they didn't, right? So Grayscale filed its lawsuit back on June 30th, and they essentially said that they wanted to convert their GBTC fund, which was a closed fund and wasn't able to handle any withdrawals or could only take new deposits, and they wanted to convert it into a spot ETF. And the reason is that it was sitting at a massive discount. Just back in January, it was sitting close to 50% discount because nobody really believed that Grayscale was ever going to be able to get this converted into a ETF. And so they had been going through the legal process, and the issue at hand was that Grayscale had been denied while two other products had been passed, right? So recently the SEC had passed two Bitcoin futures ETPs in which they had said that these ETPs, exchange traded products, were fine, and that they had passed all the regulatory hurdles that needed to get passed. While with the Grayscale decision, they came and they were denied on issues of fraud and manipulation across the market. So Grayscale essentially came and said that, well, you've just allowed two of these ETPs to go through for different reasons, or for the same reasons, or like you've allowed these two ETPs to go through for reasons that were being denied. So they went to litigate it, and they actually got the courts to side in their favor, pretty soundly as well too. Now the SEC has to go through and review it on the merits of the two ETPs that they've already passed, and in theory, they will have to allow it to become an ETF now. I mean, from everything that was in the court's decision, and we'll read some of the language there, but from everything that was in the court's decision, this is almost guaranteed to become a Bitcoin ETF now. And so Jake talks about, like, will Chair Gensler really accept this loss? So they could just use this decision to say, okay, that's it. We're going to allow an ETF. We're going to allow all the ETFs now, right? Because we don't really have a leg to stand on. Additionally, it's not just Grayscale who's here, it's like all of TradFi. So like BlackRock is trying to push through. There's been a bunch of big TradFi players that have been trying to get their ETS through. So this may just be okay, we got our decision through the courts. We're not going to appeal this, and we're just going to let all the ETFs go. And that could be what we're seeing on Friday, right? So on Friday, we're actually going to get a bunch of decisions in this case. And so we actually have a special guest joining. So Chanho is here. Hey, Chanho, how's it going? Welcome.
Hi guys. Hope everyone's doing well.
Yeah.
I don't know. We haven't pumped in like 24 hours, so I'm getting impatient.
Yeah. So looks like the SEC could also do an en banc appeal, which we talked about, where it goes from the district court to all of the judges in the district court who would come onto the appeal. But based on the language that was in the ruling, they probably won't do that, because it was pretty clear in what the judge said. There wasn't a lot of wiggle room for them to get out of this. Yeah. So Chanho, did you guys, what was your initial thoughts seeing the Grayscale decision?
Well, I like to bash on market efficiency a lot, but I do think it's correct when it's correct. So I checked the GBDC discount, and I think initially, right, it went, some people were saying they saw 15% or something, but I think it kind of went back toward high teens, right? I don't know what it is today. I haven't actually checked, but
it's let me bring this up, right? So this is a chart that we checked yesterday from the block, and yesterday it was sitting at about 20%, and we talked about it yesterday, it was sitting at 24.9%. Now it's moved up to 18%. So it's close. The discount has closed 6% in a day, which is pretty incredible for the size of GBTC.
Yeah, but I guess it still seems like, and I was reading some news earlier too, right? But it seems like, the market's a bit skeptical, and it's hard to know whether it's because traders just don't understand the legal stuff and the implications of how this stuff works, or whether they know something in the aggregate, right? Always kind of hard to say, but yeah, the ETH, I mean, people are looking at GBTC, but there's also the Ethereum trust, right? The Grayscale Ethereum trust, where the discount is much larger there, and it has also closed. It jumped, but not as much, maybe because it's a little bit lower profile also, and I think people also expect it's going to take longer for that one. But that one still seems like it could be quite a bargain, given that there does seem some uncertainty. But I mean, I've been watching it like everyone else. It seems not quite as definitive as I would have thought, if you go by the prices. Right?
Is this the definitive institutional trade of the year, where back in January you could have bought GBTC at near 50% discount and ETH at near 60%, pretty much 60% discount? And GBTC probably is going to fully close here in the next few weeks, and I would assume the ETH product will at some point too. So that trade, that just like the Widowmaker trade, it's what caused the downfall of FTX and Three Arrows Capital. So many, also Celsius as well too. I mean, it wiped out so many people who have been betting on this Grayscale switch from a closed product or closed fund that they have into an exchange traded fund. So many people were betting on this, and it led to billions of dollars in losses. And now we finally get it. So it's just another example of the market proving that it can move way past whatever you're solving for longer than you ever can.
Yeah, I mean, some people are now coming out, revealing their hands, right? And I don't think I can mention anyone specific, but there were people I wouldn't have thought were in it, but they were, so it's surprising that it is indeed the trade probably of the year, where people thought buying Bitcoin was a trade of the year. It turned out some people were you know, when you see like a 50%, like you say, well, even if it doesn't close,
Yeah.
you know,
Yeah, that, like, looking back on it in January, like 6 months to get a great trade like that, where the trade setup is essentially like you're buying GBTC and then you're hedging with the futures products or some sort of perpetual product and just waiting for that spread to close. And I wonder how this changes the market dynamic once GBTC comes back up to like 0% discount to NAV. Like whether that changes like the market structure in the perpetuals, because people would be unwinding all of these perpetual shorts. Probably be selling GBTC too once it converts to the ETF. So it's probably net, like net zero, if you want to call it, but it could lead to some price appreciation if people want to hang on to the GBTC long as they close out their shorts.
Yeah.
So, like, looking at some of the language in the decision, right? Well, first of all, we had Barry Silbert, who came out with just one word. He said victory. And we'll talk about if it's actually a victory for DCG here in a second. But we got another guest. So Nagaking is here. Hey, what's up? What's going on, sir?
Hello, sir. How are you?
The king has arrived.
He has.
The king has not brought audio with him.
Yeah. So language in the decision said, we posted this on Leviathan News, where it said to avoid arbitrariness.
Hear you guys, 1 second.
Oh, okay. So to avoid arbitrariness and caprice, administrative adjudication must be consistent and predictable, following the basic principle that similar cases should be treated similarly. NYSE ARCA presented substantial evidence that Grayscale is similar across the relevant regulatory factors to Bitcoin futures ETPs, and the commission failed to adequately explain why to approve the listing of 2 Bitcoin future ETPs, but not Grayscale's proposed Bitcoin ETP. In the absence of a coherent explanation, this, unlike regulatory treatment of like products, is unlawful. We therefore grant Grayscale's petition for review and vacate the commission's order. So essentially, the judge said, like, you have no leg to stand on. You're essentially making up arguments as you go along, and you're arbitrarily punishing Grayscale for some unknown reasons, probably political.
Wow, that's big. That's insane. Like, really.
Yeah.
This kind of an argument, like, this is the most bullish thing that I could have imagined.
Yeah, we're already seeing the nickname floating around, Garbitrary Gensler.
Garbitrary Gensler.
Sir King, I think we can hear you now.
Great. Yeah, I can hear you guys too. Can you hear me?
Yes, sir.
Awesome. Yeah, I was voting for Capricious Gensler, but it didn't gain any traction.
So what was your initial thoughts on the Grayscale decision?
I just went full left curve and max bid. Like, I think it's pretty big. I talked with Chanho about this a lot, and it was like, let's see if I can summarize, because we did go through a lot of the bull and bear case. So for me, I see it as it's tugging on the thread, which opens up a lot of doors. Like, in some way, it's can function as a Trojan horse to get a lot of TradFi money into the system. I was saying anecdotally, I like to go to these like investor meetings where it's like you invest in some fund and then the geezers that run the fund give you free dinner and then you discuss or whatever. And I talked to a lot of boomers that are financially savvy there, and almost all of them say they'd be willing to invest in Bitcoin if it had some clear, well-regulated vehicle. So a lot of these guys are chomping at the bit that they, if they can get something that they can trust. And so I think this opens the door for that. I think it's a slippery slope also towards, leveraged ETFs, short ETFs, things like that.
Yeah, that's where sort of Naga convinced me, because initially I was mid, and then we just kind of discussed it. I think we were going so far right, we just ended up being on the left So I actually made, I think it expired, but I made like, you know, one of those mid twit memes where it's like the guy in the middle was like saying what I'm saying, which is like, well, Bitcoin ETF by itself, you know, doesn't help much. You can actually buy Bitcoin and put it in your 401k now. You know, there's several options, you know, like, well, how does this help? And then the guy on the left is like, Bitcoin ETF means everyone will buy Bitcoin. And then on the right is, I think, what Nagaking was saying, which is like, if you look at the growth of the ETF industry, it's like been tremendous, right? Like it's turned out to be a very popular kind of wrapper, right? And the thing that's kind of fueled that, like everything else, you know, it's just like how Robinhood now is actually providing a lot of order flow for a lot of even, you know, big broker dealers, right? Like they're just, a lot of the retail, right? It works because they're trading so much, right? You don't want like a bunch of people just buying and holding. That's not going to drive up the revenues, right? The trading volume, right? So the same things happened with ETFs from what I understand, right? Like you have all these multi like strategy funds, and the reason they're so efficient at doing these various strategies and combining them is because of ETFs. So because even though ETFs have costs, which is one reason you would actually, like a mid-curve guy, argue against why is this good, it turns out when you're doing things like spreads and different, you know, portfolio combinations, right, and rebalancing, that the management of the fund itself is a cost, and then using ETFs actually makes it more like effective meta package, right? Like a meta ETF. And then one thing these guys love is like leveraging, right? An inverse ETF. So imagine you want like a leveraged, you know, 10x leveraged inverse Bitcoin ETF because you want to trade against Bitcoin, right? Well, it's more convenient for these guys running some of these hedge funds to just have it as an ETF rather than managing all of that and, you know, paying their prime broker or whatever, right? Like they'd rather just do this. So I think so more speculation though, I think is good for the underlying, because like how do you you know, like all these speculative ETFs, right? Like we see it in other products actually. The more speculative ETFs there are, the more liquidity you need for everyone that's managing the arbitrages, right? Managing, you know, closing the gaps between the ETFs and the underlying, right? So there's actually a lot of money there, a lot of trading, right? Which fuels more trading and more speculative. That's sort of the you know, the irony of trading, right? Like more trading is good if it leads to more trading, because you have to do more trading to be safer when everyone's trading. It's like that. It's like the whole
on the spot markets,
right? You need to keep, the more derivatives you have, the more you know, derivatives you need to stay safe to keep trading.
Yeah,
that's kind of the weird cycle you go into. And I think it's, you know, I mean, obviously weird stuff happens, like financial crashes. But anyway, sorry to go on. But I think there is like a valid view here that, you know, I'm just sort of outlining what I think is the view. I'm not saying I'm totally convinced, but I think there's a good argument to be made that Bitcoin liquidity will improve dramatically.
Yeah,
You know,
I think so too.
because of, you know, the need for trading it, you know, to manage all these different, you know, derivatives basically on top of it.
Yeah, that's true. And additionally, I think there's it. I don't know if you guys have ever traded the actual CME Bitcoin futures. It's not that liquid, honestly. Like comparatively, all the other futures CME products, like it's one of the more liquid products to trade. And I'm sure there's reasons for that, but I would guess that the Bitcoin ETF would be much more liquid than whatever the futures are offering right now, especially with the size of GBTC, where it's like what 600,000 BTC, and you know those shares could because of how the shares work, they can be loaned out. Market makers can use them. I mean, there's a bunch of different ways that liquidity can improve with the addition of this ETF. And then you get all the other products that are on top, like you guys talked about, like the 2x leveraged, 3x leveraged like ETF products that people can just buy and hold instead of having to, use some offshore perpetual exchange, right?
Yeah, I've never understood who, I mean, like, yeah, that's like, Gemini had theirs, right? And it had so much lower liquidity, I guess, versus, as typical, I guess, for Gemini. But I never really understood who was using the CME futures, right? Because the volumes do seem low, and especially during bearish times, they're like, it's been non-existent, right? In some of the years after 2017, but before the recent, bull rush. So, I would guess like the way most of the futures markets, right? Like they do have mostly speculators, but the speculators obviously do not like to think they're trading on noise, right? The smarter people like to think they're trading on signal, but that means you need people on the market that are like hedgers or producers or something, right? Like if you're in the sugar markets, right, there's people, like if you're in the coffee market, there's like Starbucks and people like that actually trading, and they have signal, right? If Starbucks is like, needing to hedge all their coffee all of a sudden, they know something through their, network of information, something bad's coming, they just learned about it, that's signal. So I think even with like 90%, I forget, I don't know the exact number, but I think it's something roughly like that, right? Like even in these well-developed futures markets, even though it's mostly like speculators, you still need some underlying signal. In fact, I would say that's what makes the futures trading so profitable. Like a lot of futures traders are trend followers, right? They're very strong. And of course, trends happen everywhere, but a lot of people specialize just in pure trend. And the reason it works is these trends, if you look at these futures markets, are very persistent. Like they're like, sometimes it's, just in the range, it doesn't really trend. But when it does trend, it's like this huge persistent trend. And obviously it's being driven by some actual event in the world, like famous example, right, in the movie Trading Places, it's like frozen concentrated orange juice, right? Like, when the orchards or whatever were all devastated by some bad weather or something, right? And then if you learn about this is like a persistent trend as the information seeps into the market, right? It just lasts for months, right? And that's how you make your money, right? But with the Bitcoin futures, like what is there, right? Like who is there hedging? And
well, they're cash settled as well too. So that's an important distinction about those Bitcoin futures.
Right, but my point would be, how do you get this? Yeah, it's not people actually buying and selling, right? It would be more like because actually, Naga and I were talking about this, but there's this really annoying San Francisco Federal Reserve paper that came out, I think, early 2018. People still cite it, but it was heavily cited then, and explained how CME futures is basically responsible for sinking Bitcoin price. And their argument relied a lot on the fact that, on physical delivery of Bitcoin. Like, why buy it now if you can buy it later? And if you see the prices go down in the futures, you can just buy it later for cheaper. So that reduces the buy pressure. But of course, this paper didn't understand these are not spot delivered. Yeah. So somehow they wrote an entire thing, never issued a retraction or anything. And, it's just fun, right? But anyway, like, yeah, the spot thing is important, but I think that makes it even harder for information to get in. Like, how would information get in, right? The only thing I can think of is like Bitcoin miners or something hedging, but I don't think they do that because, I don't have any numbers, but I would suspect they don't do that because, like, how would you do it? You just basically pick some price above like the current spot price, and you're like, I'm willing to give away, right, like the gains from above some value, but now I'm hedged against the downside. But why would you do this, right? If you're bullish, you're a miner, then most of your gains come from these like parabolic, quote unquote, parabolic gains, right? Why would you give away that upside, right? It's a very long, right, tail, right? Like you're giving up potential huge amounts of money, yeah, right? If you're a Bitcoin miner and you're already invested, right, a lot of money in this, like why would you do this? So my personal theory is I don't think they're really using futures, right, to protect. I mean, that was initially a reason given, actually, by people like CME, that miners would want to hedge, and there's this demand. I'm not convinced, like, that other than like certain kind of institutional investors that just find it convenient, right? They're already connected to CME. This helps them, right? I'm not convinced people really using this, right, to hedge. So there's no signal. And if I'm correct, there's no signal, right, for speculators, and speculators aren't going to come on there if there's no trend to follow.
Well, I'm sure that they're hedging, right? Because like at this point, there's pretty much only major institutional miners at scale in the space. And if they didn't have a decent like CFO treasury management department, they'd probably be bankrupt already.
Well, I don't know, like Sailor, for example, like there's people like Sailor. Does Sailor hedge?
No, Sailor doesn't hedge.
Yeah, but but you know, like Marathon, do they hedge? I guess I'd be curious to know, like, what.
I think we've been through a couple of different cycles now on Bitcoin mining, and we talked about this before in a previous episode, but I think the major difference that we've seen in these Bitcoin cycles is that when you had 2016, 2017, and then also like 2012, those were not professional mining operations. Those were just a bunch of people who maybe like bought some warehouses and, you know, like set up their own rigs and were fighting for supply from, you know, Bitmain and Jihan Wu. And it, after like 2018, after that kind of huge sell-off down to 3,000, right? Like so many miners were wiped out, buying machines for, you know, like $5,000, $6,000, $7,000 at the top, completely underwater, had no management when it came to their production or you know, like future revenues, and it just wiped everybody out. And the only people left standing were the strong companies who had strong balance sheets and understood the volatility risks of what they were producing as a commodity. And so, you know, they definitely moved towards professionalization, definitely moved towards hedging in the, like we had Zach who said they hedging in the OTC markets. You know, they could use Deribit or Binance or really anywhere where you can find decent derivatives. And yeah, I mean, of course they're trying to stash away as many Bitcoin as they can, but you got to cover your ops costs or you're going to go bankrupt pretty quickly.
Yeah, I mean, sounds like you're saying, you know, I can believe they hedge, but it sounds like you're saying they're not. CME is just not the focal point, right? Like it is for other markets, right? I think it's just like anything else, I guess. You need some sort of tipping point where people are on it, and that's the primary location. And then, but the interesting thing is, you know, CME has been like the focal point for a lot of these like different types of you know, financial even futures and things like that. But
yeah, well, I mean, I would argue like a byproduct of the professionalization has been the Bitcoin hash rate. So, you know, I'm going to bring up a little picture here. So it's been going parabolic, right? Mm-hmm. Obviously this is not a log chart, but you know, we've seen now in this bear cycle, we're seeing hash rates go to all-time highs. And before, you know, back in 2018, we had a 30% dip in hash rate. In 2020, when we had the sell-off, again, we had a nearly 50%.
Yeah, I guess the interesting thing is, and actually Naga and I were also talking about this, which is like, are we going to see like a minor capitulation this time? And it seems like probably not.
No. Because their OPEX is managed better, right? Mm-hmm. Like these companies now have data from, you know, several cycles now to understand how they should position themselves, what sort of OPEX they're going to need to last for like 3
4. I think that kind of thing feeds on itself, right? Because then they also have their equity, mm-hmm. right? If your equity is going up, like even though Bitcoin's been going down, like I think Marathon stock has been going up. So it's, you know, you can use this to not only actually bolster your balance sheet, you can show your balance sheet and to people, you know, and get the capital.
Yeah. So we had like the only major Bitcoin miner that went out of business in the last cycle was Core Scientific, who filed for Chapter 11 back in December of 2022. But other than that, I mean, most
I didn't actually notice they went out. Like, what happened to them? Management.
Yeah, so really it's just rising energy. I think it was the rising energy prices, along with prices coming down as well too.
Yeah.
So they got wiped out essentially.
So I've got sort of a question from the extreme left curve of the debate here. One thing I don't understand about TradFi is like one of the advantages to Bitcoin is its fixed supply, right? 21 million Bitcoin total. That's all that's ever going to be minted. But if there's a bunch of derivatives, doesn't that like dilute the supply a little bit if people can buy into these derivative instruments instead of buying just raw Bitcoin?
That is very left curve, Gary.
That's what I specialize in, right? That's what the left curve cap is. The what my Twitter handle short for.
Yes and no. I mean, there's like a lot of maxis are probably like strict rehypothecation activists, right? Like there is only one Bitcoin can only equal one Bitcoin, but that's not how it works, right? Like as soon as you introduce some sort of like debt into it, like you have more Bitcoins than what has been mined.
Right. So it seems like it could just stand to like dilute the supply, which if like the fixed supply is the selling point of Bitcoin, I think that would cause like
no. So the fixed supply stays the same, but you have like additional. So it's like M1 versus M3 and MZM and like all the other different types of money, right? So you have your like base core money of like M0. And then once you start to introduce debt and other derivatives on top, then it increases the Bitcoin money supply, as you would say. But it's not a bad thing.
Yeah, I think. Well, I don't know. Like, I think it's a good question actually. But if I wanted to argue against it, so this is something I just sort of cobbled together in my head right now. But if I wanted to argue against it, I would say, well, look, everyone actually knows that, limited commodity supply means more volatility, right? And then there's economic reasons for it, right? So we're talking about curves, but if you just do the standard kind of two curves or supply demand curves, cross and stuff, you can show that, and this has actually been mentioned. I mean, there's a very famous paper by, I forget the guy's name, but he was the one that really promoted seigniorage stable coins, right? And he sort of devised a model that, Terra/Luna is based on, where, you mint these.
Robert Sams.
Yeah, Robert Sams, yeah. But he also made the same argument. But it's like a well-known, just sort of classic, neoclassical kind of econ argument, which is, if you know there's like a fixed rate of emission, it's like limited, and everybody knows this rate also, then it just ends up, whenever there's like an increased demand or something, there's just these like shocks, right? And the price ends up being very volatile, right? So I think there's even, maybe I could find it for you guys if you're interested, but there's even a CME document back in 2017, 2018 that kind of explains this, like from the very basics, right? So this volatility clearly scares people away. So the argument I would make against what Garrett said is, usually more liquidity in terms of derivatives for things like commodities like that, help absorb like the price shocks, right? Just being more liquid makes it less volatile. And that should also increase demand, right? So it's not clear actually what happens, right? Just because there's more supply doesn't necessarily mean, if it was more supply in the sense of, say the Bitcoin core developers for some reason decided to say, well, the halving thing, we don't really like it. We're just gonna like start inflating or something, and then everyone like knows this rate of increase. It would still be like very volatile when like everyone knows this, right? So I guess what I would say is, yeah, if you have like more liquidity, but it's done in the right way so that it can absorb price shocks rather than feed into them, that could increase demand. And then if that increases demand enough, price will still go up, right? So it's not clear that it's just because you're creating more. And so it depends how you make more. Do I make it on a fixed schedule? Do I make it in response to demand, which Norwich coins try to do, right? Like it all depends. Like, and you know, besides, although maybe Terra wasn't the best example, because then you're saying, well, that didn't end well. But you know, that's how like fiat currency works, right? Essentially, so it can end well, and you could argue that's like the whole inflation thing, right? Like if you do it well, then you don't see the increased supply, like, you know, leading to huge inflation, right? Like you know, but obviously, since I'm bringing up that example with like obviously has to be managed and depend on many factors, but it's sort of hard to say, I think, off the bat that because you have these derivatives. So I think the derivatives have to be managed well, you know, but, and then since it's like free markets, I guess then the question arises, will the free markets do something where it just creates some kind of, you know, spiraling effect where there is too much and it creates, but at the same time, markets are very good at, you know, matching supply and demand, right? So you know, I think you could argue that that won't happen. I hope that was sort of clear. I went over that. It wasn't meant to be an actual refutation of, you know, just bringing up some counterpoints.
I completely agree that like how it's managed is really the critical point. Like what you said, if it's always reactive, there's always a risk of a feedback loop there. But I was wondering, does anyone know off the top of their head like how the you know, how the reserves are managed in the current crop? I remember the current crop of ETF proposals, because I remember thinking that it sounded good or reasonable, but I can't remember the exact thing that was proposed. But I kind of remember thinking it was something like daily they would rebalance the amount of Bitcoin that they hold, just to ensure that it's consistent with the number of shares.
I don't know all the official ETF rules, so maybe this is like not an official, but I thought you have to do it, like you have to issue these I forget what they're called, but you have to kind of reveal like the like what the underlying like basket is, if it's like a index fund or different things. So in the case of Bitcoin, you would have to reveal like what substitutes, because I don't know, maybe the way the ETF structure, you don't need pure Bitcoin, you could have equivalents or something too, but you would have to reveal that regularly during the day, so that these authorized participants, they're called, can redeem and create the ETF shares. So the way ETFs work, which is a little bit different, right, I think, than people imagine, is you have these big authorized participants that are essentially like the market makers, right? And they're given permission. They're given essentially a special path that's like very fast, right, versus the rest of the market. And they're able to create and redeem the shares as long as they have whatever the ETF says is like the underlying. Like they just need to buy the underlying, then they can create like in whatever proportions or equivalents they need, and then they can basically instantly redeem, you know, and get the share. So this is what keeps the net, you know, asset value of the ETF close to the thing. So you would have to do this fairly frequently. You wouldn't be able to like let it go for days or something.
Yeah. Oh, sorry. Go ahead.
Yeah, I believe like if there's any dislocation in the price, then the person who's managing the ETF is able to rebalance in or out. I do want to bring up a different question. So we did have this. So it is one person. So I just want to mention that Bob Pisani on CNBC, who is the senior markets correspondent and Trader Talk blogger, it's not. He's thinking that it gets all these Bitcoin ETFs get approved by fall, which is probably what everybody else is thinking as well too. So this isn't anything official. Nothing's come out of the SEC. But what I do want to talk about is the actual Grayscale ETF itself. So it gets approved. Let's just assume it gets approved. It comes out. But in addition to that, you're also going to have a bunch of other ETFs get approved from Fidelity, from BlackRock. And my question would be, is the Grayscale ETF even capitalized within, you know, a year from now? Like why, like, here's my question to all of you, is that if you were in GBTC and it gets swapped over to being a vanilla ETF, and it has the same fees as a product that BlackRock or Fidelity is running, would you stay in Grayscale's product, or would you switch over to one of the, long-term TradFi products?
Yeah, that's a great question. I'm glad you brought it up because I was thinking about this too. I think there's two aspects of it. I mean, so one, that their 2% fee is going to quickly have to get ground down to basically zero with all the competition, right? And they're all essentially identical products, except for what you brought up is how much do you trust the different managers? And I personally, there's no reason at all I can see to trust Grayscale over BlackRock or Fidelity or whatever. I think that clearly you switch to one of those people with a long track record of making these types of offerings. I don't know that Grayscale has really earned very much trust over the last little while. That's my subjective opinion, at least. And I don't have any particular allegiance to them for any reason. So
yeah. And more importantly, assuming the fees go towards zero at some point, right? Like, or minimal fees, because once these ETFs come out, and most ETFs don't have huge carrying costs like GBTC. GBTC has like a 2% take on the AUM annually, which is crazy. Like, absolutely crazy. So that's gonna go. And then it'll just be really like swap fees or whatever the small management fee. I mean, I could see it coming down to maybe like 25 basis points a year, or even 10 basis points if BlackRock or Fidelity are offering these. Like, it'll be minimal, honestly, to run these Bitcoin ETFs. And this will have some knock-on effects for DCG, Digital Currency Group, which is the issuer and owner of the Grayscale trust at the moment. And funnily, their incomes are primarily derived from this Grayscale product, and that's all going to evaporate pretty soon. And then what's left of DCG, especially in their ongoing battle with Genesis and Gemini and everything that's happening there, like, DCG is really not looking good for the future.
Yeah, I don't know. I'm a little bit cynical about these things. Like, in my experience, a lot, like, especially with big institutions, right? Like, I think it depends a lot on the salespeople and relationships. So I think it's, I don't know how good Grayscale is at this stuff, but if they have good relationships and they can kind of offer people like, oh, well, we have other products, or, like, there's sort of synergistic things they can offer, then I could see them hanging on. Especially since this is another thing Naga and I were talking about, which is like, besides all the liquidity stuff, like, who's really like the target, right, for these expensive ETFs, right? I think it's really like things like endowments and pension funds, right? You don't need many of those, actually. Some of them are huge, right? I think the California, like, firefighters one, and like teachers, it's like huge, right? Like, you just need a few of those to stay in business, actually. So I think there are actually a few, there's a few stories about brokers doing funny things to get the business of people. But there was some funny stories about this one broker that he got in trouble for, offering these people like sports tickets and, like Broadway shows, and very minor stuff compared to the amount of money, right, that's being talked about. But, you stroke the ego or whatever, or flatter people, or you give them, like, make them feel good, and you get their business, right? So I think brokers are always getting in trouble for this kind of thing. And the reason is, they do try to, wherever the line is, right? You want to be optimally near the line without crossing it, right? And then you get their business, and you get one major pension fund, right? That's huge business, right? So I think it's kind of hard to say. And it's also one of these things where some people get discounts, right? And then the reason you even give them discounts is you tell people, well, these people are our client, and then that helps you get more clients. So there's, who knows, right? Like, they might waive the fees for certain people to be like, we are, this pension, right, is our client. And then every other pension is like, well, Yeah. So now I'm just sort of blabbing up. But I guess my point would be, it's sort of, I think with sales stuff, it's hard to know, right? Like, because when I worked in like financial services, it was very unclear why people even approached us with their deals they had, and they would insist these other people were their clients, or like on the down low. Of course, I think they're not supposed to talk about it, but they always sort of let it drop somehow. And then you're like, but I don't want to pay extra. Like, why? Like, what are you offering? But they try to sell it, right? So I never understood why some of these projects existed, but obviously they exist, right? It's always hard to know why people pay more.
Well, sometimes they're just oblivious, right? Like, for a long
but the reason I bring up pensions and endowments, I feel like they're under very weird restrictions. So, I don't want to like
why would a pension or endowment like buy a mutual fund with 3 to 5% carrying costs, or like upfront costs and then high carrying costs, and then maybe even some exit costs as well too, when they could just buy a SPY ETF, right? Yeah. Well, the fees, right?
Yeah.
Like those mutual funds go into the banks and say, hey, sell this product for us and you're going to get a boat at the end of the year, plus a mansion and maybe some cars.
Yeah. But one of the stories I was telling about actually involved like one of these pension fund managers. I guess the thing is, like, it might be very unclear to the people, the lawmakers and stuff involved. So they usually hire some guy, right? And then this guy, it's often like very few people, I guess, involved in these decisions, and they just sort of delegate and hope it seems naive, right? But I guess that's what actually happens. And in this one case, this one guy was sort of in charge of all the decisions, and he was going out to fancy dinners and just being wooed by these guys, and he needed like Broadway tickets. So it happened. So maybe it's a bit of a fluke thing. I don't want to like generalize and say like it's all happening to all pension funds, but the existence of such a possibility, I'm not willing to discount. Like, Barry Silbert telling his people. I don't know if I should. Is this like slander? I guess I'm saying, like, imagine someone like Barry Silbert taking, telling his people, do what it takes, and then,
So if it's actually beneficial in the short term for DCG and Genesis if the AUM is closed, or sorry, if the NAV discount is closed, because that's what led to pretty much all these issues, like with Gemini. And yeah, so DCG probably is going to grow a lot slower. They may lose a lot of AUM to BlackRock and Fidelity, but remember, they are long-term entrants in this space, and they probably do have like our best interests in heart. I mean, I can't. I mean, that's really like sounds pedantic, but I do give credence to people who have been here a long time rather than these new entrants.
Cool.
Yeah.
Oh, hey. I was just going to say quickly, yeah, I do think that's a fair point. There is some experience factor there that you should factor in the relationships. But I was also thinking that, so this is maybe my more left curve take, but do you think they're betting on the convergence themselves? They're implicitly tied to it, of course, de facto.
But that's what
they think they have an active trade on.
Yeah, I think that's what led to the whole issue in the first place. Is that they were like, as the they're probably hedged out using futures or something like that, and as the discount got bigger and bigger and bigger and bigger, those carrying costs just exploded, and eventually it ate into their business too much, and even the 2% fees that they were collecting on Grayscale were not enough to cover those losses, and so they had to go into like not default proceedings, but like whatever sort of proceedings they have with Gemini at the moment, and the Winklevi twins.
I think they've also engaged heavily in buybacks, is my recollection too, at various points, right, to try to stem the increasing discount. So I think technically those are like losses, right? So they need to the gap helps them.
Yeah.
Yeah,
so
I'm just thinking if they have, well, what I was calling an active trade, but now that you mention it, yeah, that actually would just be the natural hedge that you would have going into this. And you're right, it probably is how they ended up losing massive amounts with that gap growing so much. But I'm just thinking maybe they can earn enough from the gap closing that they will at least have a cushion to have a little while to start thinking about what to do next as their fee income decreases.
Yeah, we'll see how that plays out. So, well, let's kind of wrap up the Grayscale news there and get to some of the other stuff that we reported on. Uniswap also had a big one yesterday with a dismissal of a class action lawsuit that was seeking to hold them liable for sales of scam tokens. And we posted a tweet by Gabriel Shapiro, and it's actually pretty good, right? So, and it gives some good fodder for, Gabriel Shapiro said it gives some good fodder for like Treasury proposal in various SEC cases, because the identities of the scam token issuers are basically unknown and unknowable, leaving the plaintiffs with an identifiable injury but no identifiable defendant. And so by suing the Uniswap defendants, hoping this court might overlook the fact that the current state of cryptocurrency regulation leaves them without resource, essentially says that like Uniswap has no way of knowing, and even if they could know, well, which they can't, in this case, they move towards dismissal. And oh yeah, hey, big news yesterday. Twitter, aka X, zeeted that they had announced that they had acquired a license to what is this? Transfer, custody, and send cryptocurrency worldwide. It's pretty big. Actually, the market really didn't move at all on this, but you would have to assume that this is what's going to lead to like Doge being integrated as the primary currency into Twitter or X, whatever you want to call it.
So was it the Doge market that didn't move in particular?
Doge is up and down, but I guess the idea, I mean, like I'd like to hear your opinion on it, but if you're Elon and you're a major Doge holder, because that's what's reported, right? Wouldn't you integrate Doge into Twitter instead of Bitcoin?
For sure. Also for the lefts, he would just do it because he finds it funny, and he won't give up the chance, in my opinion.
Yeah.
He also had a saying about how sometimes the most entertaining solution becomes like the one actually happening, or something like that, because people like expect it in a kind of a ridiculous way. And I really think he in his mind he's kind of building it for a while. And of course, hopefully, I hope that he will also create some more usual ways to transfer value on Twitter, like I don't know, stablecoins and stuff.
Well, they had tipping, they had Bitcoin tipping, but nobody actually used it. I think did they remove it? I don't even know if it's there anymore.
No idea as well too, but we guys are probably more into like Ethereum based solutions for payments, I imagine.
Yeah,
maybe they'll add a friend tech layer where you can buy and sell shares of friend or keys of friends.
Yeah, speaking of friend tech is pretty much dead at this point. Several competitors have come out with tokens already and tried to like split the community. I actually want to bring up a tweet that we didn't actually publish this, but Razor at Frintech came out and like essentially said that he was going to not give airdrops to people that used other platforms. So they were going to like track addresses of their competitors, and if anybody went from Frintech to another competitor, they were going to essentially like not give them the airdrop. And then later on, a few hours later, he came out and said that he was all stressed out and that he didn't actually mean it, and he just wants people to build. So
Some social platforms drama.
Yeah.
Oh, that was actually, I mean, I didn't follow that whole thing, but that might have been kind of smart, right? You just need to threaten and then back off. But now everyone kind of imagines like this is like a possibility.
Mm-hmm.
Like be a little, you know, yeah, if you now tell people, oh, I didn't mean it, then people are, okay, he's not, he backed down. But then now everyone's sort of thinking, I got to be a little careful how I do this.
Yeah. But they are losing, they're losing a lot of volume. Reality is coming back. And let's bring it up. Actually, I've got the
damn reality.
Yeah, I know. People are not going to pay 20% round trip like forever to buy and sell these keys. That like revenue, they've made another $200,000 in revenue since we've last checked, which is again pretty crazy. Half that goes to the team, but it's definitely slowing. They're starting to see less inflows, and the inflows are starting to top out a little bit. And if we look,
but to look at this bullishly, like before that recent spike, it was lower. So if they're doing higher lows, you know, maybe they some of the people stuck around.
Yeah, I mean, I think it's a little strange. I mean, I think people are starting to come to terms with how it works. Like from what I've heard from some of the influencers, or at least seen this on Twitter, like people feel it's a little bit weird talking in an echo chamber where you're like having a conversation with yourself. Even though there's other people, it's strange that people can't talk to each other. And
I'm used to talking to myself.
Yeah. So there are some other competitors out there that have launched tokens already and are trying to take market share away. Yeah. So we'll see how that rolls out. But volumes are coming back to earth. And let's see. Oh yeah, friend of the show, Tarek, we posted yesterday. He actually submitted this. So if you are a member or guest, or we might even set up a public portal, you can submit headlines to Leviathan News. Actually, there is a public portal, right? Isn't there, Garrett?
We got the Discord, but I messed up the bot on that, and I'm busy migrating servers, so it's not going to be fixed in the next probably few days at least.
Right.
But soon, TM.
So Tarek,
Amen.
Tarek built this curve bot, which allows for TWAPing in and out of any sort of curve pool using Paloma, which we talked about in the previous episode. And their past 24-hour volume has been $8 million, which is pretty cool. So yeah, so you can.
It's like the easiest trade in the world because curve just goes down, down, down.
No, but you can use like any token for this, right? It doesn't have to be like.
I think you could set it up using any token you'd like. I think he set it up as curve because he knew there'd be interest.
Yeah, exactly. So definitely worth checking out. Friend of the show. It's in the links. You can come check it out. And that's all I have. Did you guys have anything else you want to talk about in news stores?
Yeah, before we bounce, we got to hear from Nagaking, who was busy, I understand, hard at work on something really interesting. And then we forced him to stop working to come here and talk about Bitcoin with us. Nagaking, can you plug your research?
Yeah. Okay. Well, so Chanho told me you guys were desperate for a guest, so I figured the bar was low for news. But I will tell you what this is. And I hope it's not under exciting. What I've been working on is Deo. I don't know if some people in the Curve community are familiar with Deo. He's proposing to do a V2 pool, a tri-crypto pool that's all of the wrapped LSDs. So it's going to be wrapped staked ETH, the Lido one, Rocket ETH, and staked Frax ETH. And the reason I'm excited about it is because I noticed that almost none of those wrapped versions have very much liquidity on chain. There's basically a balancer pool with a bunch of them stuffed in there, with a lot of slippage and whatnot. But there's two cool things that are, I think, will likely stem out of that, but this is like very early stage info. So one, Deo is working on a interface where you can essentially deposit ETH and it'll just wrap it into whatever gets you the best positive slippage into the pool. And two is if we get it working well, Michael was mentioning he'd be open to adding that as collateral for CRV USD, which I think would be quite cool. And we're basically we're gonna try and like really max out the liquidity density on this one, since those should largely trade in relative unison. You know, they'll have slightly different interest rates or whatever, but they should be pretty close. So that's my minor, very early stage alpha leak for you guys.
So which protocol would those LPs be on?
This will all be on Curve.
Oh, great. So this is going to be like a Curve, Tripool, Stake for XETH, RETH, or Steth pool, right?
Deo ETH. Call it Deo ETH.
That's right. Yeah. I was trying to think of a cool name for it, and I was like, dude, try LSD, but like try Wrap LSD.
Yeah,
like,
that's a great name, actually. I that one's gonna go. That's perfect, actually. You don't have to like just keep it simple, right?
First hits free.
Exactly.
That's so funny. That's what Deo's interface should say. It can say try LSD, first hits on me.
Exactly. Some great marketing can happen around that.
There you go. Ask him for 10% for that one. So
that's interesting. I think obviously like I'm biased in my beliefs on the LSDs, but the interest rate thing will be interesting. I wonder if people will be happy with shouldn't you maximize, like, here's a question actually. Should you maximize LSD interest rates, or is there something else that you should be interested in?
That's a good point. I mean, I guess the most basic. Well, in some way, you want to discount the volatility also. So I guess you just want to say like max the Sharpe ratio or something like that.
Yeah. But let's say you have like 3 LSDs to choose from, and you're trying to allocate. Like, what is the primary indicator that you're looking at? Is it interest rates?
I guess so. There's some trust factor, I guess, that I'm bringing to the table, but it's pretty blurry. And in some way, that's why I like the pool, because I don't have to decide. I can just throw them in there.
Well, you can kind of look at like things like the CRV equivalents, right? Like if you look at those, right, the convex one is still by far the most popular. And the rates are lower because of that, so you can kind of think like, why is that? And I actually was comparing a few of them, and I was like, well, Y curve is doing really well, and it's actually the discount's not too bad on it, so it seems a little bit hard to understand, right? Because like you could say, well, some of the other ones you're like, okay, I'm going to take a lot of slippage if I need to get out, or there might be reasons you might be thinking I might need to get out, right? Get out of it, what's the liquidity on it? Y curve liquidity is actually not that bad, right? And the discount's like pretty low, which I think would make up for it. And the interest rate's like, I think something like 7-8% higher. So like, of course that's annualized, but it is a little hard to explain. But I think, and then Yearn's not, they're not like so bad at marketing either, right? So it's a little hard. They have more marketing probably than Convex. It's a little hard to know, but it might just be like integration with the rest of the Convex system, things like that, right? Because obviously you get it. Like one way you get, wrapped, right? Curve from convex type is, from Convex. So that could be one reason.
Well, that does point to a factor, I think. So in that case, there's the weird situation that this is a one-way wrap job, right? Whereas with these staked ones, you can unwrap and withdraw, right? But there are different. I think across the different products, there's different limitations on how you can redeem. Is that right at this point, or no?
I think they all have redemption queues that you can use now, right?
Yeah, but I guess the question would be, are some faster or something?
Right. That would be what I would try and factor in.
Yeah, but assuming I think assuming liquidity's equal for all of them, which it pretty much is, right?
That's the weird thing, actually, is not like there's no liquidity for stake or what do you call it? The staked frax ETH, for example.
What? No, it has lots of.
I look for ways to say I love
Mixing them
you.
up.
But
It is just as good as the Steth pool, for like moving in and out.
The Steth pool.
Yeah. Yeah, this is one of the things. This is one of the things. I'll see if I can go find the report that we published. That was published a while back, but like the efficiency of the stake frax ETH pool is something like 20 to 30 times more than the Steth pool. A lot of it has to do with like the A factor as well too, but no, it's much more efficient. Stake frax ETH pools, or the frax ETH pool is probably the most efficient pool comparatively to Steth and RETH.
Interesting. Yeah, I'll have to look at these more closely.
This is very, if we're doing very left curve takes, I think with staked frax for ETH, I think the name's just kind of long and cumbersome.
Oh, I agree. I honestly think that doesn't help.
Yeah, I think that doesn't help. I think that might be one of the blockers for me. So
when I started thinking about this pool, like I had to like kind of sit down and like make sure my mind was mentally organized because there's such a like jumble of letters. So I was like just to get really clear, hammered into my head, like this one is this one, this one is this one, you know?
Yeah, actually, I think Wire's like, I think they have their staked Y curve. I think they sort of just say Y curve because I think they know like having ST in front is like, oh, weird. You know, so I think if you look at some other like kind of docs or you know, marketing or whatever, I think they just talk about like Y curve, but then when you get more into it, it's like, okay, now this is you know, you exchange this for like staked Y curve. But I think all these things are a little confusing for people, right? Like people don't, you know, need to know the exact ticker symbol, but if you have like a weird ticker symbol, then it becomes like alphabet soup, and then people don't really understand, like, is it ETH? Like, is it like ETH wrapped 3 times? Like that sounds scary. What is this?
Yeah, I honestly definitely have some weak prior of like the more letters, the more likely it is a scam.
Yeah,
because I feel like each letter you're adding a new layer of wrapping essentially. So it's like, okay, each one of those each letter adds more risk.
right. That I think that factors into it, right? Because that's very much the right part of the curve to be on. You know, it's a little bit toward the left, but if you go far right, you end up, I think, still there. But you know, like the more wrapping it seems to be, maybe the symbol indicates more wrapping or something. People like confused, and then people get scared about the thing Garrett mentioned, which is like, how far am I away from the underlying? Is it really there? Or, you know, things like that.
The possible counterpoint to that would be wrapped ETH seems to be safer than ETH nowadays. No reentrancy on wrapped ETH.
But even wrapped ETH, right? People were scared. Yeah, like what is it?
Oh yeah, I was going to depeg.
Yeah, and honestly, the arguments were not great. Like for people, you know, trying to dispel it. You know, I guess wrapped ETH does not have a, you know, I mean, there is like a consortium of people that support the standard and obviously deploy the contract and all that, but there's no marketing really around it. So there was no, I think, good kind of well-oiled response to it. And people are just like, well, look at the contract, you idiot. But you know, that's not really a good response to most people. Like, look at the contract. And then, you know, I think most of the people saying look at the contract probably never looked at the contract, you know, so it's like one of the it's actually pretty short, you know, in defense. I think it is I mean, I have looked at the contract. It's like a relatively short contract and not too bad, but you know, even short contracts have bugs. And actually Wes is a little confusing because they have many versions actually. So even people that know about it and sometimes point out stuff in the contract, like I might be talking to them, they'll point to like a different version. So it's not so clear cut, I think, you know.
Yeah,
so
maybe oh, sorry, go ahead.
So I found the report. I went back. So Prisma Risk has done excellent reports on every single LSD, and we'll provide the link here. But on the slippage, so Frax ETH creates a 2.5% slippage on a $54 million trade of Frax ETH to ETH. So 1 inch slippage 1 inch estimates 1% slippage for a swap size of 27,400 frax ETH. By contrast, CBETH would produce similar slippage with only an $18 million trade, and Steth would require a $300 million swap, although the market cap of Steth is over 32 times that of frax ETH. So
Interesting.
I would this is probably the best roundup of LSD. Let me see, go to the bottom. Where's this? It's like, so Prisma Risk is part of the Llama Risk team, and so they've done collateral risk assessments for SigFrax ETH, RETH, Wrap Staked ETH, Coinbase ETH, and if you dive into it, it's very, very, very in depth. They have like protocol fundamentals, performance analysis, market risk, technological risk, counterparty risk, risk management, and all these are like very in depth. You're not going to find a more detailed description of like all the risks and risk factors for the LSDs that you're using other than this Prisma Risk documentation, because they go through everything.
Yeah, I definitely think the Llama Risk / Prisma Risk guys are definitely top notch. I'm a little annoyed that 1 inch. I think Naga and we could produce a better slippage report, at least on the curve pool side. So maybe we'll have to look into that. But that's interesting.
Yeah, my immediate thought is those numbers are going to be a little bit state dependent. I mean, even if the A is constant, it's going to depend on the balances in the pool. But still, those differences are big enough that I don't know that any state changes are really going to.
Yeah, but I was just saying we probably ought to be at some point putting out stuff like that, right?
Yeah. I mean, maybe even just live dashboards, right? Like, because basically what I'm saying is, I wish those numbers were live, right? So we should just do that.
Yeah, that would be good. I mean, if you could take all the metrics from the Prisma Risk stuff and make it live in a, I don't even know where you do that, like Dune or something else. Maybe it's its own site. That'd be pretty cool.
We're kind of leaning towards making our own site for other stuff anyways, where we'll be posting like the simulations and stuff like that. So, and I've always thought that it'd be nice to put more kind of in-depth metrics there.
It's not too hard. There's now there's all the AI people, have these nice frameworks for pushing their data models and stuff, and they look nicer than Dune. Because you can sort of play around a little bit more interactively.
I love Dune, but the fact that you can't like zoom in on charts is very annoying to me.
Yeah, exactly. Yeah.
Yeah.
Some limitations on which contract endpoints you can call in Dune.
What did you say? There's
but we're not bad mouthing Dune. Honestly, like Dune is probably like one of the best products out there. The fact that we can't zoom in is just like nitpicking at this point. I'm not like
let's bash Dune.
Yeah, let's just.
I had a Dune idea, but it was just an idea. They say it's like the implementation, is what wins, right? But I remember initially back in those dark days, like we were talking about 2017, 2018, I thought about a Dune-like product, and people told me there's no market for such a thing. Like, this is stupid. Like, who would want to do? The idea was the SQL queries on the blockchain. I was like, surely, I was like, this is the thing I want. Like, people keep talking about mining rates, and these will be, especially back in 2017, 2018, right? People were making up metrics, right? Various, you had the Willy Woo type people having a new metric every day about different kind of market caps versus like hash rate. There are all these metrics, and I was like, you just have to look at their chart and stuff, because they took the time to get the data. But it wouldn't be nice if I could just do SQL queries against the blockchain and get all this. People are like, no one wants to do SQL. No one likes SQL first. Like, everyone hates this stuff. Like, who's going to be doing SQL queries on the blockchain? And I was like, okay.
I mean,
for bashing Dune. For bashing Dune, it's like 400 pages long and super dense. Who has time to get through that?
That's the one thing that I think is a little bit of a problem. I wish there's a little bit more. Well, okay, that's not even a problem. It's just being greedy, basically, for a cool free product. But I wish there's a little more scripting you could do that's non-SQL, because a lot of times, okay, I'm still salty about this. The thing about the Uniswap v3, like where it's like, oh, it's losing like so much every day. They're doing this like markouts metric, but I dug through the SQL code and found that it was like double counting all kinds of stuff. And I brought this up to the guys, but no one ever responded. But the reason why I think it matters is because it's like they had to write overly complex code because they had to write it as a SQL query, and it's like it was hard to understand unless you like really thought it through. So it would be nice if you could add.
And it runs on their platform, right? You can't as easily iterate and fix it on your machine.
Yeah.
Right.
Right. But I think for most cases it's good. I mean, like I have a bit of a bias because like I'm always doing weird stuff, which is going to be a little like too weird for that kind of a platform.
Yeah, maybe that was my mistake. I was targeting my proposed Dune, pre-Dune idea to people like you, and they were just like, I can do it better in Python or something. I didn't know about this middle ground of people, right? Like quantitative people, right? That aren't like really developers, but they're, they know finance, they know blockchain, they want to get the data, they want to do their analysis. More like the I don't know, business analysts, right? And I guess like business insights type people.
Yeah, people who would be maybe data scientist type person also. And like, but the thing is though, I think someone like me.
But during that time, there weren't really crypto hedge funds and things like that. So it was just ICO time. You just ICO'd.
We actually had the Dune people on our show a few months ago. Back when they launched some of the new stuff. So we'll have to get them back on to give them some feedback. But mostly, I actually really like Dune. To be honest,
Dune's great.
Yeah. No, it is fantastic. And also, I would say that me as I can do better in Python person, I would say probably I'm wrong because like if you look at how much like Chanho and I have spent so much time on just the data grabbing and formatting side of things that it's just insane. And so having something that's just works is fantastic.
Exactly. And
I have to like leave my scripts running overnight, and half the time it doesn't work. So it's like a block gets dropped or something. So I need to like rerun.
I think it would work. Is there like a Dune plugin for Excel or something? I think that's actually what people want at the end of the day. But
that's for the Apple Numbers app.
Yeah.
Well, so they have like an API now, though, right? That's one of their new features, isn't it?
Oh, that's cool.
That's interesting.
I thought I saw something about that, but I don't know. Yeah, maybe you should invite them back. Actually, maybe I should watch the original one because maybe they address things I'm interested in that I didn't catch before.
So last thing that I want to get your guys' opinion on before we wrap up. I found this the other day. This is honestly like a service that I've been waiting for somebody to build for a long time, and it's called Beam. And really, like, I hate going to exchanges because, like, I just want cash to show up in my account. Like, as somebody who's mostly on chain, like, when I'm cashing out money, I have to go through this whole process of like logging into the exchange, which takes like 20 minutes to do all the auth codes and emails, and then like to send stuff into withdraw, and it's just a hassle, right? So this is the first product that you just plug in your address, or they give you an address and they hook it up to your bank account, and you just send crypto to the address, and magically it appears in your account, and you never have to go through any exchanges.
That's amazing. I'm completely with you. That's the exact product I want. Do you know if there's some legal issues with this type of thing? I always assume
no. You have to KYC, and I'm sure they use an exchange on the back end. But the only thing that's like hanging up for me to use it is it's like it charges a 3% fee, so 1% processing and 2% trading fee, and then 1% stablecoin fee, which is like, honestly,
maybe 1% isn't so bad.
I mean, there's $100. That's $100 on 10 grand, right?
Yeah, it seems like these fees are always rather high, which makes me feel like I probably don't know like the demand and the competition, right? Like, I think, is it really? I guess my question would be: do they really need to do this because to cover, to be profitable, or are they just trying to beat the next guy, and the next guy is just charging more?
Well, nobody's doing this. I don't like Coinbase should have this option. Coinbase should just give you an address that like if you send money to this address from your address that you've KYC'd, it should just automatic, and especially if you send stables, right? You send stables through Coinbase, they just automatically do it without any fees. I bet they could. This is a Coinbase product that should get launched.
Yeah. Well, they also like basically downgraded their UI. I felt around the moment where I started primarily using Coinbase for this purpose, like they made it much harder to do this, because in the old GDAX interface, it was like pretty easy to just, I send myself stables, convert to USD, withdraw. Now, anytime I go on Coinbase, I have to like refigure out what the hell is going on in order to just send money to my bank account.
Yeah. So I think especially for the 3% fee on selling out of crypto, that seems a little bit high. Like
yeah,
at $300 for 10 grand worth of ETH just doesn't sit right with me.
Well, doesn't Coinbase, I mean, the Coinbase debit card, right? Like you can like pay for, it'll convert for you, and there's some processing fee, and some are more expensive than others. I think USDC is, as you might expect, is like the cheapest, by far the cheapest option or something, right? Like if you want to spend your USDC, but they let you spend your other crypto. I think there's like a limited list though. I don't think it's as high as 3%, but I think it's rather high still. Like I think most people
zero spending fees and no annual fees.
Right, but isn't there like a conversion fee?
I'm checking right now.
For different crypto, like if you want to spend your like Stellar or whatever.
There are no fees for spending US dollars or crypto, including USDC, with the Coinbase card. And
yeah, but I think the other ones, that's why they mention USDC, I thought, because I think other ones they do allow, but
no, they just cash out whatever you have through Coinbase. That's pretty dope.
This is a debit card?
Yeah.
Cool.
Yeah. So yeah. But that's nice. I mean, honestly, like free USDC transfers, that's pretty easy to fund. This might be the best option for everything. Like 3% seems a little bit predatory. Like if it was 1%, but I guess they have to make money, right? Somehow. Like if you're launching this and you're not Coinbase, like you have to.
Yeah, that's kind of what I'm wondering. Like, do they see, like, they must have done some research, right?
I don't think so. I think it's just unit bias. Like I think they're just thinking in units of like integer percentages, and they're like 1 is the lowest one when they should be thinking in basis points.
Okay,
I literally think it's that.
But think about Coinbase versus like Wallet or whatever versus Coinbase, what they used to call like GDAX and Coinbase Pro, and now it's like Coinbase Advanced Trading or something, right? Like if you go to the fancier like advanced options or something, like it's cheaper, right? But if you do the instant kind of convenient, trade or whatever, they charge you quite a bit. Like I don't even know anymore because I don't obviously want to pay extra. But it's like 1% or something higher, right? And
Coinbase even gives you like crypto back on your purchases.
Yeah. Huh. I think you have to choose, I guess, on that list or something. You get your rewards.
If you transfer your USDC into this, is it instantly available for use with the debit card, or do you have to wait a few days?
You probably, I think it's just whatever's in your Coinbase account, right?
I thought at least for USDC, cool. I thought it was pretty instantaneous.
Yeah, I'm sure if you have USDC in your Coinbase account, you can just spend it.
It's interesting. It's interesting because right now they're offering. Well, I don't know. This is like turning into Coinbase ad. My apologies, but right now they're offering a little bit over 4%. Like I think something like 4.15, 16, something like that, annual for keeping it in USDC. So you could keep if you like debit cards or something. I guess that's an option, right? You keep it in USDC and you can use this card.
It's 4.6 actually right now.
Wow.
Oh, cool. Oh, wow. I think that's higher than when I look. But I noticed, there's other TradFi products too. Like they've been creeping up a bit. They seem to be competing against each other. So
not Chase Bank. Chase Bank is still at 0.02%.
Oh, okay. Well, they're like an actual. Yeah, I don't want to. I mean, I don't know why I'm starting to plug things, but I know it's Marcus as like. But anyways, yeah, it seems like. But unfortunately, I don't think these are deals. I'm a cynical guy. It's like the credit card points, right? If you're not doing it, then you're getting screwed.
Mm-hmm.
Right. So you need to do all this stuff to like stay where you are. It's like the Red Queen analysis. You know, they call that sometimes the Red Queen analogy, right? Like it's I think it originally started with biology, right? You don't seem to be getting any stronger, but your immune system is like fighting things off all the time, right? Like if you drop someone from 100 years ago into our time, they would just like their immune system would just get crushed, right? So you know, I think we probably have to do all these things. Like we have to sign up for something like Coinbase, get the 4.6 or whatever it is now. Then we have to cash out from that instead of our actual cash, because otherwise we're losing that, you know, like depending on how much money you have, right? That easily tens, hundreds of dollars per day, right? So like, it's just like the credit card points, which I realized, I mean, I'm always a little bit late to that. That's the sad thing too. Like, I really had to start doing the credit card points like some years ago, because I noticed you go to places and then there's people that are always getting extra stuff. And then, you know, like things like hotel rooms, they give you less perks, but then if you have to points or some membership, you get the regular room now, right? So you're being like squeezed out of like the expected service, right? Like with the airlines too, right? You're going to be like getting a much worse experience without like the special membership or frequent flyer miles or, you know, anyway.
Well, if anyone out there is looking for a better experience, just make sure to always look for Leviathan live stream where we've got Chanho on, because you know the stream is going to be a bit more long-winded. You know there's going to be a much more quality, and as far as I can tell, there's no real drawbacks, so it's kind of like a win-win situation. So. Chanho and
I've been
Nagaking.
chastised very flatteringly.
Yeah, he also kindly is he's the sucker on all of us airline mile optimizers. So thank you for doing
hey,
that.
I'm willing to come on and once in a while, and you guys can just show me like what I'm doing wrong. Like you're paying for that. You're paying for that. Oh,
yeah, thanks for the free champagne.
That'd be a great spin-off show. I'd watch that. But I think we got a wrap for today. So thank you very much. We're already a half hour over, but definitely come back anytime.
All right, thanks.
Awesome.
Guys.
Thanks for having us, guys. It was a pleasure.
And thanks everybody at home for tuning into Leviathan. We'll be back tomorrow with another episode. Is this the last day? No, tomorrow's the last day of August. Goes by quick, doesn't it? All right. Squid and Squidettes, we'll see you tomorrow.
See ya.
All right, thanks.